Stocks are selling off, and there's lower stock prices this week than there have been for a while. Back in January, we had a booming stock market. Stocks really took off to begin 2025, but over the last 30 days, it hasn't been so pretty. The NASDAQ is down more than 10% if you look at the last 30 days. And that drawdown actually creates opportunities to look at companies that are really good companies where their stock prices have been taken lower, potentially buy a stock at a discount. So I wanted to go over my top picks of stocks that I'm buying for my portfolio and the reasons for it. Just a quick reminder that over the last 5 years, the stock market has done great. The NASDAQ's up 125%. So in the short term, we are experiencing down stock prices. That's good news. It's good news if we are doing our homework on a company, establishing what the intrinsic value is of that company, and are looking for the stock market to give us a really good discount so we can see great appreciation going forward and beat the market over the long haul. That's the first company I want to talk about is Chubb. This is an insurance company. Insurance companies tend to be really profitable most years, and the insurance industry had a bad year in 2022, 2023, but 2024 was a really good year for them. One of the companies that was left behind was Chubb. They are incredibly profitable, really good free cash flow, and I think they could really perform in 2025. So I am buying into Chubb. It is a really good company. Warren Buffett owns Chubb. Let me show you the valuation I have on this company. I measure the intrinsic value of a company by looking at the free cash flow that I expect the company is going to produce in the future and then discount that cash to today's value. And Chubb just has great free cash flow generation, a really high number at $16 billion per year. And I'm going to grow that cash because they are growing it quite well. And I'm going to grow it by 7% in the first 4 years and then grow it by 4% in the terminal value field. Now, all those cash flows I'm going to discount by 9% to get to an intrinsic value of Chubb, and that value is $326 billion. I add cash and take away debt and arrive at an equity value of $311 billion of value, but the stock is only at a market cap of 114 billion. So there's a big difference in intrinsic value versus stock price. The intrinsic value is 173% more than the current stock price. So this has tremendous upside. And I'm going to be buying shares in Chubb, building up a really good sized position. I think the fundamentals look great. Warren Buffett's an investor. And I think that this company is really going to outperform in 2025 and 2026. Uber is a stock that I am accumulating shares in, and there's a lot of reasons for it. First, the big picture. I think Uber's in a fantastic industry, which is ride hailing. They are the dominant player. Their network gives them a big advantage. And not only can they continue to grow in the ride sharing market, but they're expanding into food delivery. They could do grocery delivery. They could also take advantage of the robotaxi potential business of the future. So all those things are exciting about the Uber business. The stock is doing okay in 2025. The stock's up 18%. But the market hasn't really supported the Uber stock. There's been stories that robotaxi might be a threat to Uber, which I don't agree with. I think robotaxi could be an opportunity for Uber. And competition from robotaxi will take a long time for it to arrive. And I think it'll evolve rather than just, really starting abruptly at some point. So I think the sell-offs were overplayed. It really discounted the stock and made the stock very attractive to an investor like me. Let me show you what that discount looks like. When I discount the future cash flows of Uber and value the company, I get a 112% discount on those cash flows compared to the stock price of Uber. That's a fantastic discount on an exciting company, leader of their industry that has terrific growth ahead of it. So Uber is one of my big sells. I think they're going to continue to perform in 2025 and really just be so much more valuable over the next 5 years. Next stock up is Catalyst Pharmaceuticals. This is a small cap, high growth pharmaceutical company with terrific margins generating free cash flow. The company is up for the year 2025, which is rare these days. But more importantly, over the last year, this stock has really performed well, 30% higher. Over the last 5 years, it's done tremendously. 520% appreciation on the stock. There's more to come, in my opinion, because they continue to grow their revenue, showing their pharmaceuticals are in big demand. They have terrific margins, and let me show you the cash flow. Catalyst Pharma has terrific cash flow as a new young business, and they're growing that cash flow nicely. So my cash expectation in my forecast is quite lucrative. It has an overall value of close to $5 billion in intrinsic value. They only have cash on the balance sheet and no debt. So their intrinsic value plus cash is $5.3 billion, but the market cap of the company is only 2.5 billion. So there's about 114% discount on those cash flows if you compare it to the stock price. So that's a terrific opportunity. The stock's been working for me, so I'm going to keep buying into Catalyst Pharma. Elevance Health is a health insurance payer. This is where companies go get plans for their employees to receive health care. And historically, this has just been a fantastic stock. This space has really seen a couple of tough years in 23 and 24, but Elevance is back. In 2025, the stock's up 12%. Over the last year, the sell-off created an opportunity, created a nice discount in the stock because when I look at their fundamentals and their cash flow and their revenue growth, this company looks fantastic. When I compare the intrinsic value of their cash flows compared to their current stock price, I get an 80% discount on Elevance, which is a fantastic discount. Healthcare is one of the leading sectors for 2025 so far. I think it's going to continue to work for the rest of the year and go into 2026. So I want to keep accumulating shares of Elevance Health. And the final stock that I'm going to put out there is Meta. Meta is a tremendously valuable company. Nobody would argue that. But is it discounted? My conclusion is that it is. This stock this year started the month of January on a tear. It was up 25% in 1 month. What a run. Since then, it's given up a lot of those gains, but still is up 6% year to date. For the past year, this has been a winner. It's up 24%. For the 5 year, it's an absolute winner, up 264%. This is the biggest holding in my portfolio, and I am buying more shares of Meta. Let me show you why. Meta's core businesses, which include Facebook, Instagram, WhatsApp, continue to expand at a very, very fast rate. What makes the business even more attractive is their AI business looks fantastic. Meta AI is really working. It's a fabulous user experience. I really like using it. I think that extends their business to give them more opportunities for more revenue and to have more users and have their users spend more time on their platforms, really increase engagement. Their cash flows are tremendous. And when I do a forecast on their cash flows and compare it to their current stock price, I'm getting a 51% discount. So I am buying more shares of Meta and stacking up those shares in one of the most important businesses we have in our economy. Corrections, pullbacks, and crashes are something the market really needs to really break the fuse on stocks that are overpriced. In some cases, recently, some stocks were too euphoric. They had good fundamentals, but stock prices just went through the roof. And it's time to get stock prices that are more realistic. And in some cases, stocks are being priced down well below their value. So it's time for a long-term investor like myself to take advantage of that and start buying into these quality businesses and make money over the long haul. Those are my 5 stocks that I'm buying into that I wanted to put out there. I hope you found the list interesting. Keep in mind, this is not financial advice. I'm not recommending you buy, hold, or sell any stock I ever talk about. I'm just sharing my experience and my point of view. Thank you for watching. Good luck investing.